G'day, my name is Dean Crocker. I'm an equity analyst with the PSG Wealth team, and today I'll be taking you through our latest EIA report completed on the proposed transaction in which Standard Bank would acquire the remaining outstanding shareholding in Liberty. In terms of just an executive summary to lay the platform for the future slides, Standard Bank came out with a proposed acquisition of the remaining outstanding shareholding in Liberty. The transaction, in terms of the purchase consideration on the 15th of July, would have totaled R87.60. In terms of our view, and I'll touch on the various compositions of the consideration, but in terms of our view, we believe that it's fair consideration from the perspective of a Liberty shareholder. It is trading at a slight discount to its long-term historical price to group embedded value, equity value, and a 25.9% discount to its price to book value. However, we do not believe that the historical averages represent fair value in the sense that it has not accounted for the latest COVID-19 third wave potential implications in terms of greater claims. And on the back of that, there's been the recent civil unrest across the country, which also hasn't seen or taken account into the numbers. And then the greater trade and economic environment, which hasn't picked up. And we have seen quite a bit of pressure coming through on the insurers, particularly in terms of Old Mutual and Sanlam. From a Standard Bank shareholder perspective, we feel the transactions actually benefit to them. It's in their favour, definitely. It would appear that the transaction is at a slight or a large discount to the current LBH share price, by 15.33% discount. There is also the transaction in terms of its composition, utilisation of script is beneficial, and in terms of the cash component, it would only appear that Standard Bank would be paying out roughly about 200 million rand of the proposed Standard Bank cash consideration, as the LBH distribution would effectively fund majority of Standard Bank's cash consideration. So in terms of the event, Standard Bank made an offer to acquire the shares in LBH, except for those that it currently holds, or through one of two of the vehicles. The proposed purchase consideration, they propose to issue 0.5 Standard Bank shares per LBH ordinary shareholder. Then there would also be a 40 rand distribution by Standard Bank by way of cash per LBH share. And then LBH would declare a special dividend of 11.10 rand, subject to obviously normal approvals. So what this implies is the total consideration is about 87.60 rand, and this was as of the 15th of July, if I remember correctly. There is obviously a moving variable in the terms of the Standard Bank shares, which means that consideration value fluctuates every time Standard Bank share price moves. LBH is trading at a slight discount to the purchase consideration. You'll see in the next slide we talk to how the price increased on date of proposed transaction. But we do believe that the slight discount right now reflects the present value of kind of a potential closeout later on in the year or early next year. And this gap will narrow as we move towards present or the time value for money as we move towards transaction date. So in terms of the impact, the share price of Liberty jumped significantly on date of release. It revised to just under what the proposed transaction value was. So it was up 22% on date of release. The proposed consideration at pre-market was 89.46 rand. You can see that on date. There's that fluctuation in the Standard Bank share price, but right now it trades at a small discount to the purchase consideration. Standard Bank shares are at a decline on data release, and this is largely due to the fact that there would be a dilution of the current shareholding base through the issuance of new script. Generally, it is also seen that the purchaser usually sees some pressure in terms of share price on data release. I would, however, mention that the 5.14% discount to the purchase consideration does imply the 95% completion rate by the market. So in terms of the assessment, we do believe that despite the consideration value which Standard Bank has proposed, being below that of Liberty's current price to group embedded value, historical price to group embedded value, as well as their price to book, it really does seem to be a fair offer for Liberty shareholders. And I mean, the main reason for this is that the numbers that we base these valuations on have not taken into account the impact that we've seen in the market in terms of the COVID third wave, in terms of civil unrest, and the greater trade environment has been seen quite a bit of pressure coming through on the life insurers. So we feel that the share price is probably fair in that sense, despite it being at a discount to longer term values. In terms of Standard Bank, they are effectively using scrip to acquire it, with the Liberty distribution covering nearly 89% of the Standard Bank distribution that needs to be made. And the reason we say that is because, remember, Liberty is Standard Bank already owns about 54% or 50-odd% of Liberty. So they will be receiving a portion of that distribution that they can use then to pay out. So effectively, it's a very good transaction from a Standard Bank perspective in that sense. In terms of the overall purchase price and allocation that they'll do, once this is taken into consideration, that 11 Rand 10 cents that is paid by way of distribution from Liberty will reduce the NAV of Liberty. But that is not merely a cash transaction, it's more a book entry transaction that is accounted for in the purchase price allocation by Standard Bank. So overall, it would appear as fair value for the Liberty shareholders and a favourable transaction for the Standard Bank. So definitely skewed towards the Standard Bank consideration. But overall, it does seem like it's a very well worked out transaction. It does allow Standard Bank the ability to start to account for 100% of Liberty. It allows them to fix any capital adequacy requirements that may be in Liberty. Potentially, if there's anything coming through from the COVID-19 and then civil unrest claims now, it allows them as the biggest shareholder, who now fully owns them, proposed and post-transaction, to really rectify the balance sheet of Liberty and grow it going forward. There's also a lot of synergies we believe that could be enhanced through the combination of the businesses, particularly just on the overhead side, not to mention what there might be in terms of ramp up of future business, but just reducing overheads, making the operating structure a lot more efficient. So from a Standard Bank perspective, it really does look like a good transaction. So if you'd like to place a trade, you can either speak to your financial advisor, or the trading desk would be more than happy to assist. Please take note of the disclaimer and have a good day. Thank you.